Okay, good evening, ladies and gentlemen. I'm back with another market review and an outlook. Today we are going to talk about, or rather to discuss a couple of pairs here. We're going to begin with oil, and then we'll move to gold. We'll also look at dollar and some dollar pairs, together with EURJPY and GBPJPY. So we are going to look at a couple of asset classes. So without further ado, let's begin with oil. So from our last discussion, the last YouTube video I had released, oil was trading somewhere here, and I had pointed your attention towards this specific PD array here, which is a daily buy side imbalance, sell side inefficiency, or a bullish daily fair value gap. I told you that this area carries a lot of weight because apart from this fair value gap here, if you look to the left, you will have noticed there's an order block here, this one right here, whose opening price was still inside the same fair value gap, and we also had this breaker here, this last bullish candle here that was formed before price took out this liquidity down here. So I told you that confluence of a breaker, an order block, and a fair value gap, also coupled with a structure break, was made this area to be a very strong area, whereby you made this area to have a lot of confluence from which you could have expected a solid buy setup. And true to my words, as you can see, once price dipped inside here, we had a very clean run higher on Thursday. We had a very clean run higher on Thursday, and this is an opportunity that you could have engaged, and it could have made you some money, even if it meant just taking out this buy side liquidity here. I remember I said I wanted to see whether we will pop this high here, but then that's what we call price expectation, or rather identifying a drawn liquidity in order to have a bias before you trade. But that does not usually mean, and I repeatedly tell you this, that does not usually mean that since that's the long-term target, that after you get an entry like say here, that you hold it until there. No, you always have to take partials. So for instance, an entry here, you could have had very many stages of taking your partial profits. The first one could have been the previous day's high, which was the high made on Wednesday. That was a good area to take profit from. And also the high that was made on Tuesday. That was also a really nice area to take profit from. And then after you've done that, you break even the remainder of your position, and then now you hold to see whether it will reach your long-term target. But you don't hold your full position hoping that it will reach your long-term target. You will be very disappointed because these markets are very volatile, especially with the current macro conditions going on with the war between Israel, US, and Iran. It's usually prudent that when you get a good entry like this one here, you be very accurate and discerning with your exits, so that you don't get caught up in something like this. So as you can see, we had that clean run here. It took out those 2 points of liquidity, and then now on Monday we didn't have a lot going on. As you can see, we just had more like a ranging day, and then on Tuesday we had a bit of a sell-off after taking out both Thursday's high and Monday's high. And then now waking up today, we had all this gap, which was definitely prompted by the agreement Trump had signed yesterday. If I'm not wrong, I'm informed that he signed some agreement yesterday, and that is probably one of the main fundamental reasons that might have caused this drop lower. So now, currently, the question of course is, now if I'm trading oil, what am I looking at right now, or rather what are my expectations and what is my analysis saying? So first things first, as you can see, once we poked above the premium market equilibrium, the immediate expectation for me would have been that it's now ripe for a buy, and I would have wanted to continue going along with it. But as you can see, that expectation has already been violated with this gap lower that has brought us way below the premium market equilibrium, and even went further to break structure below this daily swing low here. So this makes buying gold to be a bit tricky at the moment. And what I will suggest, or rather what my analysis is telling me right now, is since we have broken structure to the downside here, now my focus is on this low here as a measure of internal range liquidity, because we have failed to take out the external range liquidity here, and we have broken structure to the downside here. Now I'm looking at this low as the possible and immediate next draw on liquidity. However, what conditions have to be met in order for me to comfortably say that I will be looking for setups, say from tomorrow, to take out this liquidity here first before even considering other liquidity points. For me, it will be this level here. You see this buy side imbalance, sell side inefficiency, this bullish fair value gap here. We have this midpoint, or rather the mid threshold of that daily buy side imbalance, sell side inefficiency. So I would love to see a solid close below there first. Once we have a solid close below there on this time frame, once we have a solid close below that, then and only then will I be comfortable to look for a sell setup to take out this immediate internal range liquidity that's resting below this swing low here. If we fail to do that, then I won't be interested in selling oil, and I equally won't be interested in buying it. And why? Let's look at the 4 hour first. As you can see in the 4 hour time frame, or that level. Okay, let me make sure it's also visible in the next time frame for continuity. Yeah, it's now visible. Yeah. So as I was saying, I would love to see a solid close below this level before I even consider beginning to sell this pair right now. And if we fail to do that, there will likely be a measure of retracement, because as you can see, there was this solid very big displacement lower that broke 2 points of market structure on the 4 hour time frame. So there's this big sell side imbalance, buy side inefficiency, or a bearish fair value gap that's resting here. So if we fail to close below the midpoint of this daily bullish fair value gap, then that means price will likely see a measure of retracement. But I wouldn't bother to even engage in that, because it's very likely to be short-lived, and we'll continue to see price rolling down lower. And the reason for that is, if you look at this time frame, the next market structure point that we have is all the way up here. So trying to call this market higher, and you don't even have a 4 hour structure break to the upside, it will be a very risky move or speculation. So that's why I'm really looking at this level that price is currently trading at right now, this daily buy side imbalance, sell side inefficiency, and I would love to see whether we will close below that. If we fail, then that only means that we are going to retrace now within this fair value gap. And if I'm interested in selling it, then after it has maybe failed to close below the midpoint of this bullish fair value gap, then I will be scouting to see whether the midpoint of this, whether we will have the willingness to trade to the midpoint of this and fail, or even fail to trade to that midpoint and roll over going lower. I wouldn't be so quick to buy it. I would rather wait for an opportunity to sell, and I mean an opportune setup to sell. and that for me will be represented by two scenarios, if I may repeat for the last time. The first one is a solid close below this. If you have a solid close below this by tomorrow, then I will use the immediate 1 hour framework that will be formed during the London session to see if I can get a setup that will take me lower to this liquidity during New York. But if we fail to close below this level here, then that will mean we're going to have a measure of retracement higher, and that measure of retracement for me, I will be looking at this fair value gap. I will grade it like this. I'll grade it like this, from that low, from this low here to this high here. After I've graded it like that, then I will start now, I will look at this midpoint here. This is the midpoint of that fair value gap. There's also this 75% here, so I'll look at these two levels to anticipate a possible move lower. But if we fail to even reach these levels, then that will mean that this pair is seriously weak. So that's how I'm looking at oil at the moment. I don't have any bullish expectations, especially after such a significant gap lower that has led to a structure break. What might lead me to change my mind in terms of buying it is if we create, you see right now the next bullish market structure point is all the way up here. So the only time I'll be willing to even look at it as a buy opportunity is if maybe we create another structure point on the, which hasn't printed yet, and then we break it to the upside solidly with displacement. But until then, I'll just be looking on how to sell this pair using those two scenarios that I've told you. So with that, we can move on to gold. So for gold, I remember from our last discussion, we were this candle was on a Tuesday. This candle was still being printed, and I told you that if we break structure to the upside, that is have a solid close above this swing high here, then that will automatically mean that we are bullish, and the next drawn liquidity will be this sell side imbalance, buy side inefficiency, or a bearish fair value gap, which is encapsulated from this low to this high. And true to my words, after we broke structure to the upside, we had a clean run the following day that traded to the midpoint of that sell side imbalance, buy side inefficiency. And in the process, we formed a fair value gap here, a daily fair value gap after breaking structure. So this automatically made this fair value gap to be a very sensitive point to anticipate a buy setup from. And as you can see, once we retraced into it on Thursday, we failed to even close below that midpoint, and that was a very good sign that we are still bullish. Because remember, wicks can do the damage. Wicks can look like they have violated your array, but the true narrative, in order for you to get the true narrative of what price is really trying to do, always look at the bodies. Because in as much as this wick went a bit below that fair value gap, you can see the body close was way above the midpoint. Even this one here as well. Even this one on Friday, though Friday was Good Friday, there wasn't a lot of trading in gold. The gold market was closed. So as you can see, from Thursday to Monday, we haven't managed to have a solid close below this midpoint. And even on Tuesday, that is yesterday, we traded to that midpoint again and still failed to close below it. And as you can see, after that we have had another run higher. We've taken out this liquidity that was resting above these highs, and now currently I'm looking at this imbalance here. This is likely to be the next drawn liquidity, since we have already broken structure, shown respect for these, and shown a willingness to break above, or rather take out these highs here. So I'm looking at this area here, and I would love to see whether we will have by the end of today, whether we will have closed above the opening price of this bearish candlestick here, this candlestick that that traded into this buy side imbalance, sell side inefficiency. And why am I looking to see if that's what will happen? Because if price does that, if price has a solid close above the opening price here, then it will automatically make this a bullish propulsion block. A bullish propulsion block is just like an order block here. This was the main order block that propelled this move, and it created breakout structure and displacement. And after that, now the next set of a series of candles that are going to make the next order block, which is actually called a propulsion block, will be encapsulated by these three candlesticks, of which of the three, obviously this is the one with the biggest range. So this opening price is going to encapsulate the opening price of that opening. It's going to encapsulate the opening price of that bullish propulsion block, or even you can still call it a bullish order block. It doesn't matter because they serve the same purpose. So if we close above that opening price, then that for me will mean that we have created another propulsion block, which we will likely use to trade into this bearish fair value gap up here as the next drawn liquidity. I would want to see this low violated. I would want to see that remaining in place, because now that's the new market structure point that's supporting buys. I would want to see it violated. If price for some reason runs down here, then all I will want to see, if for me to continue staying bullish, is just a sweep, just a week, and then we continue going higher. But that's highly unlikely given the current momentum we are having here. So I will be studying to see whether we will form that propulsion block, and I will love to utilize it to continue going higher. Also, I'm watching this daily sell side imbalance, buy side inefficiency, this one here. I would also want to see willingness of price closing above it, because if price closes above that level as well, then it will cease to be a sell side imbalance, buy side inefficiency, and instead become an inversion fair value gap, which now we will utilize as a bullish daily array, daily PD array, to support that narrative of going into this sell side imbalance, buy side inefficiency up here. So that's how I'm looking at gold right now. And also, if we drop to the 4-hour time frame, we have these imbalance here. We have this 4-hour fair value gap that was formed here, and I will want to see. I'll be studying it to see whether we will respect this array. And respecting this array for me will can appear in two ways. The first way is trading to this midpoint like we are trading at right now, and seeing failure to close below it. Okay, and then maybe price forming an order block within here and then continuing higher. And then another scenario will be if we go way below it, that is we trade outside of it. I will want to see the bodies of those candles closing inside of the fair value gap and not outside. Okay, so if price does that, then I'll be very, very confident in knowing that even this array on its own will be sufficient for us to, number one, ensure that we are going back again above this daily sell side imbalance, buy side inefficiency, and making it an inversion fair value gap, and then also now continuing going higher to the next drawn liquidity, which is this daily imbalance up here. Okay, now we look at dollar. So for dollar, and if maybe you didn't watch the last episode, these markings up here, these are what we call the IPDA data ranges, and we use them to number one, identify the most immediate and relevant range that the price is working within, and also to identify the most relevant arrays that the interbank price delivery algorithm, which is called whose acronym, or rather we abbreviate it as IPDA, the PD arrays that it will seek within the past either 20 days, 40 days, or 60 days. So this is what that is, these markings here. Okay, if we look at dollar right now, we can see we took out liquidity resting above. There was this equal highs way back here, and then also there was this immediate liquidity within the IPDA data range. This one here, yeah. So we are taking out these, and then now we also came again and took out now this liquidity. So which that is even more relevant for us because it's within the IPDA data range. So after we took out that liquidity, as you can see, price change delivery, we saw an order block forming here. That was a valid change instead of delivery, and then price respected that order block, and now as of today we've seen price solidly breaking structure below this low, and at the same time having a solid close below this premium market equilibrium. So what this means for me right now is that dollar will be seeking internal range liquidity, and the immediate, or rather the first point of liquidity that I will want to see taken out will be this low. And once we have a strong and solid close below this low, then I'll be confident in knowing that now we might continue to this midpoint, and then maybe all the way to these lows down here. But that will all be determined on how, number one, we'll take out this liquidity. We'll love to see that liquidity taken out by a solid close below it, not just a weak, not just a week. We'll want to see price taking it and then going even further below it. And then the next now thing that will really determine whether we will continue even going further lower will be how price will treat this daily bullish fair value gap. And if we will be still very bearish, then we will see price strongly even breaking this midpoint of this daily buy side imbalance, sell side inefficiency. And once we see that, then we will be confident in knowing that the next liquidity point will be down here. And since dollar is bearish in such a manner, based on the breakdown I've shown you, that is the liquidity sweep, the formation of an order block, the break of structure, and the solid close below this premium market equilibrium, then that means that Euro USD and Pound USD are likely to continue being bullish, and those are the next pairs I'm going to briefly discuss here. So for Euro, number one, between the two, that is Euro and Pound, Euro is stronger. And why is that? Because of this SMT divergence, the same thing I was talking about when I was discussing gold some time ago. There's this SMT that happened here. As you can see, price came and failed to take out this low in Euro, whereas if you look at Pound, price came and solidly took out that low. So that automatically means that number one, it signals and confirms the bullish momentum in both pairs, and then number two, it confirms, that is as far as relative strength analysis goes, it confirms that between the two pairs, Euro is being accumulated more strongly than Pound. Hence, it's likely to make new highs more easily. And as you can see, today's trading is a proof and a testament for that, because as you can see now, Euro has already managed to take out these highs here, whereas if you look at Pound, it hasn't yet taken out the same liquidity points that Euro has taken out. So for Euro, it's likely to continue going higher, and after it has taken out this liquidity, the next area will be looking as a drawn liquidity will be this bearish fair value gap, and especially the midpoint of it. That's the immediate and next. That's the immediate drawn liquidity. And after that, we have these equal highs here as another measure of internal range liquidity that price will likely take out after violating these bearish fair value gap. If we look at the 4-hour time frame of euro, you realize that it has this 4-hour buy side imbalance down here, and so I would love to see price trading back into this 4-hour buy side imbalance, sell side inefficiency, and respecting it. Once I see that, I will scout for a buy setup that will lead me into this immediate short-term target, which is the midpoint of this daily sell-side imbalance buy side inefficiency. So that's how I'm looking at euro right now. And since between the two, euro is stronger, I wouldn't bother trading pound, or rather I wouldn't put a lot of money on pound. That is, if I'm doing my risk allocation, I will allocate more of my money to euro, since it's likely to make higher highs with ease. But if maybe you will want to trade pound, then you might want to consider these equal highs here as the immediate drawn liquidity, and after we've traded past that, then this will be the next liquidity point that you should look at as your drawn liquidity. And it also has its own 4-hour BC here, though I haven't marked it well. That one there. It also has its imbalance there, which will serve you. That is, if you want to maybe trade it. Just some of you just are in love with some pairs, and no matter what conditions they are in, you just want to trade them. If that's you, then kindly wait to see whether pound will respect this fair value gap before allocating your money here. But for me, I would advise that if you want to continue buying euro, wait for it here, since it's the stronger pair within the two, and see study it to see whether the buy side imbalance, sell side inefficiency, or rather the bullish fair value gap will be respected. And once you see signs of that, and I've told you from as I was discussing oil, or was it gold, I'm not sure, that how will you know that this buy side imbalance, sell side inefficiency is being respected? The first thing you look at is how price will treat the midpoint of it, because on an ideal scenario, if we begin retracing into this price is most likely going to trade to the midpoint of this bullish fair value gap, and you'll want to see price failing to close below it. That will be the first telltale sign that your buy side imbalance, sell side inefficiency has been respected, and you should start scouting for a buy setup. And how will that look like? You will see a wick, like how it did down here. You see, once it traded into this bullish fair value gap down here, this one here, you see, there was clearly there was no solid close below the how will you call it, the full fair value gap, of which now this is even the second scenario. I was talking about the first scenario whereby price respects the midpoint. The second scenario is in case it trades outside of the fair value gap, you will want to see price failing to close outside of it, and instead having its bodies closing inside of the fair value gap. Those are the two ways that you know your fair value gap has been respected. And now the third one is if you go to now a time frame like a 1 hour time frame, you see price starting to form order blocks or even fair value gaps after either trading to this midpoint or even failing to close outside, and then you start to see order block formation, fair value gap formation. That's how you know your higher time frame array has been respected. So that's how I'm looking at EURUSD at the moment. And now on to the last two pairs. Don't want this to be extremely long. That's now EURJPY. For EURJPY, I'm currently bullish on EURJPY as well. and I'm looking at this external range liquidity. That is the liquidity resting above the highest high of this range that I'm currently using. So we already have the fact that we have closed above the premium market equilibrium. That has given us a clear sign that we are likely to continue going higher. And so if we drop to the 4-hour and study this time frame, you realize that price after closing above the premium market equilibrium, it formed a fair value gap here that has currently been respected. And so as far as today's trading is concerned, I'm expecting price to take out this high and probably this high. So all I'm saying is if you're going to trade EURJPY, you are safer trying to buy it and buying it what point, up to the point whereby we take out this liquidity. But obviously you should be having partial profits along the way. And currently, in terms of arrays that I was looking at for today, I was studying this fair value gap here, and I wanted to see if it got respected the way I've just described. As you can see, this fair value gap here, and as much as price went outside of it, you can see the body close was inside the fair value gap, and in fact on top of the the consequent encroachment, or rather the midpoint. And I actually took this trade based on this 1-hour order block after I saw that price has respected this fair value gap. Let me see if I can show you guys that setup. It's here. Yeah, so I had taken that trade there, and I'm still holding it to see if we'll take out this liquidity up here. However, if we take out this high here first, I will close a few of my positions here, maybe half of them or even just one, break even the rest, and see if we can reach this liquidity up here. Okay, so that's for EURJPY. For GBPJPY, it's weaker than EJ. EJ is a bit stronger right now compared to GJ, based on the way it has been trading. It has been constantly making higher highs and higher lows. But if you look at GJ, there was a point back here that it made a lower low when EJ was constantly making higher highs. So that's why I even took that trade on EJ and not GJ. Yeah, so GJ is equally bullish, and these equal highs right here are the next drawn liquidity, these ones here. And so if you're looking to engage in GJ, then those equal highs right here will be your next drawn liquidity. And if we have now a solid close above those highs and also above this premium market equilibrium, then the external range liquidity here will be the next drawn liquidity. So that's how I'm looking at the market right now. I don't want to go past this. It's already 30 minutes into the outlook, and so I will collapse it here. I hope it has been insightful. If you have any questions, you can leave a comment on the you can leave a comment, and I will definitely address it. You should also follow us on both TikTok and Instagram. We usually do live streams on TikTok in order for you to get more insights from us. That would be all from me today. Have a lovely evening. Good luck and good trading.